our favorite experts here. She'll impart some valuable words of wisdom on one of the hottest topics facing our industry, really, in my opinion, since TrID, and that's appraisal bias. Before we dive in, just a few housekeeping items. This session is being recorded and will be posted to our website at a later date. Now, the second housekeeping item, now I urge you to ask questions. Now, I will be monitoring the chat, so feel free to ask questions. I will do my best to weave them in. So again, I'll be monitoring the chat. Our subject matter expert, I promise you, is willing to answer questions. So if you have one, fire it away. And really, the last housekeeping item I want to bring in is really a thanks to the team over at ACUMA. This year has been truly amazing. As a group, we've done our best to bring you the best experiences, educational content, and really networking opportunities we possibly can put together. But I assure you, the best is yet to come. For 2023, we're saving the best for last. Now, I couldn't be more thrilled to share that registration for this year's annual conference opened today. This year's event is being held at the beautiful Gaylord National Harbor, right here in my beloved DC area. And it's being held from October 1st to October 4th. I promise you, this is the only must-attend event for the credit union mortgage professional coming up in the fall. Now, you're not going to want to miss it. I urge you to register early. The ACUMA team and I hope to see you there. And finally, and for my housekeeping items, a quick disclaimer. The views and opinions expressed during this webinar do not necessarily reflect the views or positions of ACUMA, its board of directors, its management staff, or its members. The webinar and its materials are presented as a set of ideas and possible strategies regarding the specific topic and does not represent any endorsements of either the presenters, their firms, or the concepts they present. Okay, that's all for now. Today's webinar is being brought to you by Atlas Title Company. Joining us today is Josh Tyndall, Senior Vice President of National Sales. Josh, welcome. Thanks for being here, and it's good to see you.
Peter, it's great to be here, and thanks for having me. It's a beautiful Tuesday. Justin's favorite day. Here we go.
It is Justin's favorite day. Now, Josh, I don't normally do this, but I'm going to put you on the spot.
Okay.
I hear you're a big fan of ACUMA's On Point podcast, which I appreciate. But also to expand on that, you're especially a fan of my favorite segment, which happens to be your favorite segment of the podcast. And that's, and for those who don't know, I'm referring to the bad dad jokes that we tell at the end.
Oh, yes.
So Josh, before we dive in and learn more about Atlas Title Company, I'm going to allow you an opportunity, since this is one of your favorite things. How about sharing with us one of your favorite dad jokes?
So wasn't expecting this, put me on the spot, but I can appreciate this. Those podcasts are come in handy often, but a good dad joke every once in a while gets the room chuckling. And so I have a couple, and I'm going to start this one. I enjoy fishing. Fishing is one of my favorite pastimes. So what do you call a fish that wears a bow tie?
What?
Sophisticated. See? I mean, how can you not like that? Okay, now listen, let's go to a different form of food. All right. What do you call a rude cow?
What?
Beef jerky.
Okay. All right. All right, Josh. All right.
Yes.
All right. Thank you.
Welcome everyone to the webinar.
Welcome. So that was awesome. But let's get back to business. We'll try to get back to business. So Josh, I've had the pleasure of getting to know you, and I've had the pleasure of getting to know Atlas Title Company over the past few months. But do me a favor, share with the group a little bit about Atlas, who you are, and really what sparked the creation of Atlas.
Sure. Well, again, it's great to be here, and to comment on one of the first things you said, registration is open today for the annual conference, and we're registered. We're in. We secured the tickets, so it's go time. Atlas Title. So Atlas Title Company is a newly formed national title and escrow company. Started back in 2020. We were the first title underwriter approved in the state of California in about 40 years. So for us, it's just been a huge blessing starting out in the state of California and then blossoming into 34 more states now over the last 2 years, soon to be close to 40 by the end of this month. And it was created after many conversations. I came from one of the national four, and a lot of the people on our team also came from a couple of different bigger title and escrow companies. But we saw that there was definitely a niche and a need for lenders, where in the past we saw them being somewhat underserved and or overpriced. So that's really what sparked our idea to serve those that lend, whether it's credit unions, IMBs, banks, brokers, and now it's come out to helping on real estate transactions, commercial reverse business. That's kind of how it started.
Awesome. Now you kind of hinted at it, as you were kind of walking us through, what prompted you guys to start Atlas. But really, what's going to separate you from the competition?
Yeah. So there's a couple main things we look at. I think we have a very streamlined approach to settlement. When we look at what's taking place out there throughout the nation, clients want things done right, they want things done quickly, and they want to have it done as moderately priced as possible. So our streamlined approach to settlement is very unique in that we are able to get deals in, get the prelims out quickly because we're an underwriter, pivot as we need to during the underwriting process. If we see something that shows up on our prelim that doesn't look right, we can address it immediately, not have to wait. And then save clients on the back end when it comes to the amount of time it takes to close a transaction. So that's awesome. Probably a big one. And then another big piece here is our competitive fee structure. Most people that are listening to this, fees are important, but you don't want to focus on it all the time. But it's important right now because people are trying to save as much as they can. Sure. Whether it's the credit union, their payment closing costs, and or the member, the borrower. Mm-hmm. And then lead gen. Everyone's trying to find ways to get deals in right now. And I think one of our big differentiating factors is our ability with some of the tools that we have is to help clients out of the refi pipelines right now, effectively today, and or offer some off-market listing leads to real estate partners throughout the nation, which is That's awesome. Big deal right now.
Now, Josh, like I said, you and I have gotten the pleasure of knowing you and Atlas over the past few months. Happy that you guys became members. Now, it wasn't just one credit union saying, "Hey, you guys gotta bring on Atlas as the next affiliate." It was multiple. It was multiple reach outs by various credit unions, not just in California, all over the country, saying, "Hey, you guys gotta bring on Atlas." Now, you have, I want to say you guys have a nice cult following in the credit union space. But what kind of started you down that path of forming that cult following in that credit space? What made you get involved with credit unions?
Well, kind of across the board, when you look at kind of credit unions in general and what we created at Atlas, there are those that are on the Titanic and the big ships, and then you're on those of us that are on speedboats. And we're on these speedboats navigating through certain things, trying to be as nimble as we can right now. And so there was that organic relationship of getting creative, being cost effective, and providing a service that it's needed right now. I've been lucky enough to be in the mortgage lending and title escrow space for over 20 years, and have had a great client base that kind of organically, when we helped start the company, said, yeah, we're going to go ahead and follow. But almost immediately, the first one led to the second, to the third, and the other teammates that I have. When credit unions see what we're able to do and offer from a speed standpoint, from helping just on the back end, cleaning up certain things in-house to be able to get their clear close from X to X, helping with notaries, wherever it might be, immediately we got referred to another credit union, and then another one, and then another one. And the conversations continue to get more robust in regards to ways for us to be able to partner with them to not only help with, home equities right now, which is a big deal, but, refis, within the last year and they'll be coming back, and even purchase referrals from those clients that are getting the borrowers pre-approved are now going through and referring those transactions to us because of our competitive fee structure, so those buyers can win that deal. So there's something when it comes to the member base of doing whatever the credit unions pretty much want. Like we feel that is very unique in the entire lending space of having these built-in communities of members that there's just so much trust that's been built with the member to the credit union, and we're just lucky to be able to help facilitate on the lending side of things with them as well.
That's awesome, Josh. Hey man, I appreciate you being here. Thank you again for your time today, and again for sponsoring today's session. It's always good catching up with you, but it's time to move on and bring on our subject matter expert. Sound good?
Sounds like a plan.
Hey man, appreciate it.
Thanks, Peter.
All right, turning our attention to our subject matter expert, it's my pleasure to introduce Sally Carothers, CEO and President of TrUnion Appraisal Services. Sally, do me a favor, come on screen, come on camera, and let's have a nice conversation about, again, appraisal bias. Sally, you there?
I
hear you.
Stop my video.
There you go. I think you're coming on. All right, awesome.
I am there.
There you go. Hey, Sally, if it's okay with you, again, of course, welcome to the webinar. If it's okay with you.
Thanks for having me.
Of course, my pleasure. Before we dive in, I'd like to share a quick background as to why we selected this topic for today's webinar. Is that okay?
Absolutely.
All right,
absolutely.
fantastic.
Right ahead.
So this topic, at least in my opinion, can be more important and impactful to our industry. One that directly ties in with a credit union's goal to support the communities they serve, but at the same time, it could impact our ability to help our members fulfill the dream of homeownership. Now, that's a massive statement, and I get that. But that statement also speaks to our higher purpose. And when I say our higher purpose, that's really helping families get in homes, right? And I believe that rings true in many ways. You're taking a segment of our industry, that's the housing finance, mortgage finance industry, that's currently not federally regulated, and potentially putting them under the same microscope that we as lenders, credit union mortgage lenders, operate in on a daily basis. Plus, that's a big plus, this is a segment of the industry that we as lenders have been told to not influence or to allow to be independent since 2008 with the establishment of the Home Value Code of Conduct, and later in 2010 with the Appraisal Independence Rule requirement. And here we are on a path that, in many ways, forces us to become more involved with the appraiser. It's a lot of emotions are happening. Now I want to give some background, but more so to kind of paint the picture for, again, to why we are here. Now, I'm going to step off my soapbox, and I apologize for jumping on my soapbox a little bit. Now, Sally, since I probably did a bad job of giving the background, so do me a favor. I kind of went more on a tangent than giving background, so do me a favor. Summarize the issue. Again, this topic is an important piece to the Biden administration housing policy. But how did we get to this point where we're such a political hot button?
It's a very good question. And I think that the primary driver in the last few years probably is the media coverage that has been out there about individuals who feel that they have been impacted by appraisal bias. I think it started back in 2020 with the New York Times article. And in these examples, Black folks felt that their properties had been devalued or undervalued. Biggest case probably is the Austins out of in California, who felt that the house had been undervalued by $500,000, and they went to the bank and said, we don't agree with the valuation, and so the bank agreed to a second opinion. And the second time the appraiser went out, they had whitewashed their house. They had removed everything about themselves, which is a really tough thing, I think, for a family to do.
Do me a favor, define whitewashing for me.
So they removed all photographs, any indication that a Black family lived in this house, where they went to school, their kids' pictures, their kids' toys, anything that would be an indication that the folks living in there were people of color. And they also got a friend of theirs to come in who was white and meet the appraiser at the door. And the result was a valuation of $500,000 more. This wasn't just one case. In fact, that case has just been settled with the appraiser. There were a whole bunch of these cases, and they were all showing up in the LA Times and the Washington Post and the Wall Street Journal. But the thing about this is nothing actually new. There have been many researchers over the years screaming about racial bias. In fact, there's very good a gentleman called Andre Perry who actually testified in front of Congress about appraisal bias. And this research showed that predominantly Black neighborhoods were suffering from a lack of investment because of low valuations. And that had been occurring post the fair housing legislation in the 1960s, in the last 40 years. The problem with that research is there were no bank appraisals really to base that on. It was just done on tax appraisals. So I think it wasn't given a lot of credibility, but no doubt this has become a hot political issue because of the media coverage. I mean, it's now ABC did a documentary, I think, lowballed, about the housing bias, appraisal bias in housing. So it's certainly out there right now. I think that's really taken shape.
Yeah, and so I appreciate you walking us through the history of appraisal bias and really, how public awareness of this issue grew. And so I guess I got it's really a two-part question.
Mm-hmm.
The first part is, what are the fundamental causes of appraisal bias? I guess that's part one. And the second
Mm-hmm.
part would be, and I guess it's really more so your opinion, but maybe it's not so much your opinion, but strategically, what are some of the factors that make this a difficult problem to solve? So again, fundamental causes of appraisal bias, but also what makes this a difficult problem to solve?
Those are really good questions. And I think that when you look up, first of all, let's kind of put this right on the table. There is appraisal bias. Appraisers don't want to hear that, but there is definite evidence of appraisal bias. So let's just kind of put that right out there. This isn't a myth. But I think the foundation of that bias probably goes back to our predecessors in business, in the lending industry and the appraisal industry, who utilized the red line, who utilized redlining. So those book of maps that showed neighborhoods with red lines around them, and that highlighted areas of risk and caution. And those neighborhoods were predominantly, it was picked by race. And ironically, those neighborhoods still exist, and they still correspond with some of the boundaries, the neighborhood boundaries that appraisers are using in their reports, either unintentionally, and I don't think it's intentionally, but they still exist. So I think that is the foundation. And then we have a profession, an appraisal profession, that has just become incredibly non-diverse. So we have 97% of appraisers are white.
Wow.
And 2/3 of them are male too. So we just have this very non-diverse kind of population out there that maybe doesn't understand how to value in neighborhoods of color. And one other thing that I find really, and of course I'm a geek on this stuff, and you know that, I find incredibly interesting is that we have real issues on appraisal methodology and how appraisers operate. Appraisers have way too many chances to use subjective data. They make opinions. They give an opinion of value, but they give opinions that are often subjective about things like condition and quality and in neighborhoods and things like that. And I think what's very interesting when we try talk about some things that we can do to solve this is that appraisal modernization is trying to take away that ability of appraisers to make those subjective opinions.
Okay.
So I think that is, that's the cause. But how do we fix it? And I'll tell you, in my opinion, fixing it, the main problem is the buy-in from appraisers. And appraisers are just that we have to fix the lack of diversity, but also the opinion of existing appraisers. And they need better oversight. They need better training. We need to get some young new blood in there. We need to lower some of the barriers to entry. I mean, as you know, it's terribly difficult to become an appraiser, and you have to work as an indentured servant for 3 years and probably be related to the person that you're working for, and it's a kind of cottage industry out there. And for a person of color, they don't want to go to work for some creepy old guy in his basement. That's literally, kind of the way it is. So we need to have some major changes in the appraisal industry. And I think that, just the awareness, we need a buy-in also from you guys, the credit unions, other lenders, and your members. We need to provide members with the ability to kind of call it out and say, hey, something's not right with my appraisal. And they need to have an ability to do that.
Okay. So it seems to be that what makes this such a difficult problem to solve is that we'll say that the appraisal side of the house is not diverse enough. So in order for us to really solve it, we have to diversify the appraisal side of our industry
and the oversight.
And the oversight.
Yeah, who oversees appraisers? The state boards, and they're predominantly made up of white men. And and we need to look at different ways to train appraisers and make them aware of what's going on.
Okay. Now, Sally, you and I sat down a few months back. In our conversation, obviously, you said it earlier. You have a great passion for our industry. More importantly, this topic. I know you spend a lot of time researching and trying to prevent appraisal bias within your own organization. With this exploration, I'm sure you came across statistics and numbers that you couldn't believe were true. Now, if you could, just from this research and just looking at your own organization, would you mind sharing something?
Yeah, without wanting to bore anybody. I mean, I think that that statistics I said, first of all, that 97% of appraisers are white is one. But just kind of looking at even regular statistics of home ownership, 74% of white households own their own home. Yeah, only 44% of Black households own their own home. And I think it's 48% of Latino households. So that's a crazy difference, right?
Mm-hmm.
And that probably is not just related to socioeconomic things. That's really crazy. We've got a lot of statistics recently because we have a lot of access to data, which is really, really good, because FHFA is utilizing and sharing the data from all the appraisals that are going into the UCDP portal. So I think they examined 32 million appraisals in the last 10 years. And some of those things the things that came out of that, a couple of eggheads did a recent study that shows some really kind of crazy stuff. So first of all, just looking at simple transactions, in white neighborhoods, only 7.4% of appraisals came in under contract price, under contract price. You know, everybody hates it coming under contract. 7.4% white, 12.5% black. So that's a big, big difference. In black neighborhoods, it's more likely that the appraised value is going to come in below contract price. So looking at those, 30 million appraisals, there are kind of three conclusions that came out of that. And it basically kind of is that homes in white neighborhoods are appraised at double the value of comparable homes in places of color. That's quite stunning, really.
That is.
So the average home in a white neighborhood is $371,000 higher than in a black neighborhood. That's crazy. That's a crazy difference. And what is really even worse is that amount, that difference between the white and black neighborhoods has increased by 75% in the last 10 years. And it accelerated in the pandemic years. So in 2 years, in white neighborhoods, average home prices increased by 136,000. In black or neighborhoods of color, only 60,000. So you're seeing kind of a huge diversity between the two things. So and that's really good statistics. That's directly coming out of Fannie and Freddie's portal. Those are appraisals going in there. That's really, those are great statistics. They're not great as what they are, but they're very sound.
No, I mean it's eye-opening because appraisal bias is most certainly a hot topic for this administration.
Mm-hmm.
At the same exact time, providing a seamless path to home ownership or expanding home ownership is also a top priority for this administration as well, which I think that is one that we all can get behind is providing a seamless path and expanding home ownership to anyone who has that dream. And so, if all these blockers are in the way, it is a very important thing for us to tackle this and correct this form,
mm-hmm.
because otherwise, we're not fulfilling our mission as credit unions. And I can just speak on behalf of the credit unions in that manner. Now, segueing, I guess, to a question that came out of this, and you hinted at it earlier with, the education of not just the appraisers, but the appraisal councils and the state boards. But, as we look ahead, what do we need to do to move our industry forward? It can't just be training. Like, what do we need to do to move our industry forward?
So I think there definitely have to be major changes in the appraisal industry, and you have to make that barrier to entry much easier. So I think that's another thing. I think that you have to provide your members with the opportunity to argue their appraisal. This is in the short term. We can identify what's wrong immediately by them having a reconsideration of value. The big thing that everybody absolutely hates, nobody likes them. And I think one of the things that will come definitely out of this will be a uniform reconsideration of value. There will be one way to do it. And I think that the credit unions have to have access to that. So I think that's a huge part of where we move forward. And I think we have to keep testing the data to look at what is happening. But a major part of this is to really buy in on appraisal modernization. And I think a huge part of that modernization is sometimes taking the appraiser really out of that from having that ability to provide subjective data. And I think we'll do, I think separating them even from inspections sometimes, as we see with hybrid appraisals, utilizing them being able to use some big data that instead of just kind of pulling their own and making their own opinions. So they use data, for example, on the subject property that someone else has looked at. And somebody else, it's been tested and looked at, and we know it's not just the appraiser saying it's in good condition or average condition, and I think that's, and we saw this, ironically, you talked about, 2008 and what happened in 2008. We kind of saw this the other way around with appraisers who are making grandiose opinions about, the value. But I think we need to take that out. We've got to embrace, and I think FHFA is doing a great job moving forward appraisal modernization, but they've got to get buy-in from the appraisers, and not just the appraisal organizations, but the guys with the boots on the ground.
Sure. I mean, appraisal modernization, it's top of mind when you think, everything that the GSEs are doing, FHFA, FHA, and everyone over at Ginny. Appraisal modernization is an important piece to their puzzle. Now, do you ever foresee, thinking about the industry, looking forward and moving past this, do you ever foresee a time where, or is it even possible that, again, I'm just going to go out on a limb, in order for us to truly combat appraisal bias, do we just have to remove the appraisals from this, the appraisers from this?
No. Well, I'm going to say that because I'm an appraiser,
no, sure,
right?
But I mean, there's enough technology out there. There's enough data out there on properties and neighborhoods and, everything else, that do we ever get to a point that, in order for us to truly combat appraisal bias, that actual inspection of the property is removed and we just rely on the data that we know we have, and it's reviewed by a human being? It's reviewed by someone like you or over at TrUnion.
I think we will get close to that. Here's my I think that in the end, we need a qualified professional with a license to sign their name to something. And but I think a lot of the stuff that appraisers do right now will be removed. And it's silly stuff. Why should they go out there and inspect a house and measure it and do all that stuff? We have other people who could do that, or we have all kinds of tools to do that. But in the end, we need somebody to verify that data and do the analysis and come up with a value. And most importantly, to put their name to it, because we have to always hold somebody responsible.
Sure.
I think that that's a tremendously kind of important thing. And I think one important thing to say on this, I see a bias in three different areas. I think there's the bias that we have seen with the TV and the news shows, which is that where people on an individual basis, there's bias. And that one, first of all, can be kind of checked on, within the credit union. If you have a good QC policy where you're using your aggregate kind of statistics, UAD statistics to do your QC policy, and you've got policies and procedures, you can do that. We then see kind of the second part is the widespread kind of bias in neighborhoods of color. And that's the continual kind of idea that this neighborhood is literally where you've got two houses, one in a white neighborhood and one in a neighborhood of color, and they're different values, even though they're exactly the same house. That probably has to change. And then the third thing is just the lack of diversity in the appraisal profession and how that impacts it. So yes, I think that we can do some things on an individual basis, but there is a whole thing to be fixed here.
Sure. All right. Now, I appreciate you sharing all this, the background, the forward-looking mindset on what we can do and some of the statistics. But the big question, why people signed up for today's Fast Track webinar. We have to give them the takeaway, and this is the reason why they signed up. Now, there's a lead into this, and that lead in is we have to take in consideration that we still do not have specific guidance from our federal regulators. We don't. We just do. We hear reports and see updates that they're moving the miles, they're moving everything further along. Yes, we do, but there's still no federal guidance. What do credit unions need to do to prepare themselves for any potential change? But at the same time, are there any policy or process changes that a credit union needs to implement now, or what do you foresee coming down the pipe?
Well, I think immediately every credit union should have policies and procedures around appraisal bias. They should have them. If they don't have them, ask their AMC for them. And what that should address is how they recognize it, how they deal with complaints from members, how they report those complaints to who they report them to. So I think that's incredibly important. And actually, from what I'm told, the examiners are asking for that. So you should have that immediately.
I talked to a credit union a few weeks back, and they went through an 8-month fair lending exam, and this came up as a topic. And the question was, what's your policy on this?
Yes.
Okay, well, we don't have a policy. You haven't told us what's put in our policy, right?
I'm telling you, you need a policy.
Right. So we need a policy, even though we don't know what to put in the policy, which I appreciate. All right. So keep going. So
share with anybody a policy if they need it. I think that also credit unions need to be identifying on an individual basis issues of appraisal bias. And that can be done with a fair housing QC checklist. There is something called the FHFA UAD aggregation statistics dashboard. It's fascinating. It's fascinating to me because, of course, I'm a geek. But it identifies neighborhoods throughout the country, and it will identify where they sit as far as appraisal bias. And basically, it's looking at the percentage of homes that come in below contract, the values come in below contract price. So our QC policy at TrUnion identifies if a property is situated in an area or a neighborhood where there is a high instance of, first of all, there's a high minority population, and then there's a high instance of that value coming in below the contract price. We then look at, did the appraisal come in below the contract price? And then we examine, we read through other, is there any evidence in there of language that is against fair lending? And you would be surprised when you read appraisals what you find. I'll give you one example. I have a credit union we work for in the state of Texas, and they asked me to look at an appraisal. It was a new construction, and they didn't know why there was a problem with the appraisal, but they thought it was kind of coming in below what they thought it was. And I looked at the appraisal, and I thought there were some issues, and so I started reading. And this appraiser put in there something about this. In my opinion, this property would be worth a lot more if it wasn't located a stone's throw from the border. I'm thinking that probably is not something that you might want to put into an appraisal. So, so that kind of thing. So a good QC policy will identify, because that is going to get you, if that got in front of an examiner, it's going to get you in a lot of trouble. Those kind of comments or issues. And I think it's very important to show your examiners that you have or your AMC has a really good, strong QC policy around appraisal bias. Other thing, I think you've got to have a very strong reconsideration of value out there that allows your members to appeal their appraisal. And you need to have an AMC that will work with the appraiser to correctly address those reconsiderations of value. And one thing I'm going to say to credit unions, when you send out a reconsideration of value, make sure you read it before you send it out to the AMC. The AMC will read it, but it's a good idea because you'd be surprised what people put into a reconsideration. So good idea. I know we have a lot of really great credit unions that really look at those and make sure that they're accurate. Credit unions really need to make sure that their members have access to an effective complaint process, and that we log any fair housing complaints. We actually log it in the same way as I'm sure that credit unions did the same with the appraiser independence violations. I think the same thing with appraisal bias. So
No,
a complaint process.
I'm glad you brought that up because it's something that I kind of been, suggesting to the credit unions that I talk to is, every credit union has a required complaint log that if a complaint comes in, they're required to document the complaint and the action taken. I mean, this really should be part of that because it's only going to protect you. I mean, a lot of times complaints against appraisals it's considered operational, but this one really isn't considered operational anymore. It needs to be escalated to that senior risk officer or compliance officer who's documenting these complaints, correct?
Absolutely. This is, and you're going to be asked for this, and not just, but it goes further than just documenting. Is what are you going to do about it?
Right.
Are you going to have we will submit a complaint to the state regulatory board on it and follow up on that for our credit union clients. So you need to have a really active kind of relationship on this with your AMC to ensure that they're doing that. So I think.
Keep going, please. I'm sorry.
Well, I was just going to say the one other thing is just to embrace appraisal modernization. I've worked with credit unions a long time, and they're kind of like us as appraisers. They're not always wanting to embrace change, and I think that in the end, it's going to be for the good, and we just have to recognize that not everything needs a traditional appraisal anymore.
Sure.
And that, embrace the fact that appraisers can do desktop appraisals or hybrid appraisals. And, in some cases, especially on the equity side, use AVMs. The AVMs are very, very good. And, you're an AMC, they'll do them for you. They'll check them for you. They will test them for you, validate them for you. So recognize it's not all a one size fits all box.
Okay, that's awesome. So, it's interesting because I kind of view this as, when I think about what does a credit union need to do, they need to solve for two things. They need to solve for the complaint that's been voiced, or the concerns, or the appraisal bias that's been voiced by the member, the borrowing member. They need to have a policy that takes that in consideration. At the same exact time, they also need to solve for the appraisal bias that goes undetected by the borrower. And you do that through what you outlined, a good QC process. I like the suggestion of that UAD, I think you said it was systemic dashboard. Systemic dashboard,
yes.
I think that's fantastic. Scrubbing the geographic area against that to determine if it aligns with that. But then you also hinted at reviewing the appraisal for keywords or phrases that could hint, that may go undetected and hint towards some form of bias. Now, in the cases where, and you said it, in the cases where there are keywords or phrases, just have them removed from the appraisal completely, correct?
Yeah. I think that some of them are unintentional.
Sure.
I'm sure that the lady down in McLaren, Texas, or whatever, didn't mean to put that in. And that actually is what we do if we suspect some kind of potential appraisal bias, with our QC. We go back and say, the appraisal got flagged on this. We just need you to put language in there or change language in here that will kind of satisfy our client credit union in this case.
Now, let's if we can, I know we're kind of pushing time, but I want to focus on the reconsideration of value, because it was that reconsideration and that really that the word value, the influencing of value is really what kind of started that HVCC and AIR, 2008 and 2010. And in my experience, just a reconsideration of value goes nowhere. It's whenever I would question an appraiser on their value, it was always, well, sorry, it is what it is, right? At that point in time, we also need to have a policy on when there's a need for a second appraisal, right? Just a second opinion, correct?
Absolutely. I mean, right now, and I've changed my mind on this, and this is kind of growing out of HBCC and everything. First of all, I do think that I always call it a reconsideration of value and appeal. In every single profession, there's the ability to appeal, right? You can appeal a legal thing, so why can't you appeal an appraisal? And appraisals should be open to that. So I think that's really kind of an important. And secondly, out of HVCC, we said we kind of thought, oh, the second appraisal was value shopping. Remember that kind of term? If any of us have been in the business long enough. But again, I kind of learned that in some cases, a second opinion, there's nothing wrong with that, because we get second opinions in any profession. You get a second opinion at the doctors or whatever it is. So I think sometimes having another person go out, there's nothing wrong with it. It doesn't have to mean that original appraisal. Most second opinion policies were written around a flawed appraisal, right? It was something like, oh, it has to be flawed or whatever. But I think that there is the sometimes you just need somebody else to go look at it. And sometimes it comes, I always say this, you open it up, sometimes it's going to come in higher, sometimes lower. I usually do when any of my clients that are on this will know, I will tell you if you should have a second opinion or not. I'm very kind of like, I'll look at an appraisal, I'll say, nah, this is a good appraisal. We're not going to change this, but I'll say if it needs a second opinion. But I think that you have to make sure that probably you can see some issues with that first appraisal. There are usually some flags somewhere, and it doesn't necessarily mean they've said something that's biased or sometimes something like that. It could be that they're using dated sales. It could be they're not making the proper adjustments. It could be a lot of factors. But you can usually identify something in that first appraisal that'll put up a red flag that
I think the moral of the story is, no matter what question it, whether it's a reconsideration of value or that second opinion, the moral of the story is question it. Don't just accept it. Now, I will say this, going back to that Loan Depot case that you mentioned earlier, a second appraisal was not ordered, and Loan Depot could not fall back on HVCC or AIR because the court said, hey, sorry, you should have still questioned because there was visible appraisal bias, right? And so the moral story is question, get a new value if you have to, right?
Yeah, question and work with your AMC, because they should be the experts. They're the ones they should have a chief appraiser, somebody in there that knows what they're talking about, and make sure that you have that good relationship with them to question it. And I know that some of the guys out there are self-managing. Have somebody that you can rely on as an expert to talk you through it.
Okay. Now, I want to give you an opportunity to give final words, because we are approaching all the time we have today. But I just want you to confirm this. Regardless of the fact that our federal regulators have not put out guidance on this topic, it's still better to have something within a credit union that speaks to this policy than not, correct?
Absolutely. You need something. You do need something. A policy around appraisal bias, you're going to get asked for it. I guarantee. If you get examined, you're going to get, and you should have some kind of policy on your QC too.
Okay. Good QC policy has saved my bacon a few times.
Yeah.
Okay, Sally. Like I said, we're approaching we're approaching all the time we have for today. Before I let you go, any final words?
Yeah. The most important thing, this, even though, this is obviously the administration, this is part of their agenda. Even if the administration changes, this is not going away. This is something that is there. And so don't think that we vote somebody out or vote somebody in or whatever that's going to change. It's not going anywhere. So that's the first thing that I want to say. Also, to everybody out there, if I frighten the living daylights out of you, I have. I do have a appraisal bias checklist that we put together, and basically it's all the things that I think that you should have. And we can send it out to you. All the it gives a little example of a QC policy. I'm trying not to give away all my stuff for free, but it has just a step-by-step things of what you should do to help protect the credit union on appraisal bias, and we will send that out in the next couple of days to all the participants. And then if anybody kind of watches the webinar at a later time, we can also send it out to them too. So
that's fantastic, Sally. I appreciate you sharing that. Now, it means a lot that you're willing to share that information and help move our industry forward. So thank you for that. Now I'm looking at the chat, and I answered all the questions we possibly could. So thank you. But also thank you very much for spending time with us today. I look forward to catching up with you at a future ACUMA event.
Absolutely. And thank you very much for asking me.
Absolutely. Once again, thank you very much to Josh Tyndall and Atlas Title Company for sponsoring today's webinar, and to Sally Carothers for her valuable insight. And to all of you, thank you for attending today's webinar. Your time is valuable, and we appreciate you spending the better part of an hour with us today. We hope that you enjoyed today's session, and we appreciate that 45 minutes isn't nearly enough time to cover everything for this topic. So if you want to learn more and continue to fine-tune your knowledge, I would recommend attending our annual conference, where you'll have another opportunity to hear Sally share insight into this topic. And to close out, with a friendly reminder, registration for our annual conference open today. Don't forget to check out acuma.org and our community page for all the latest updates regarding this event. Until next time, be well, my friends. Take care.